Now I wanted to get into the FTMO side of your journey. I know that wasn't the main and probably not the area where you've made the most money, but it's still like a very huge achievement. And that's kind of what's brought the industry's attention to yourself, not your A-book stuff, not your individual journey. It's the prop firm certificate.
Because it's the biggest prop firm in the world, right?
It's the biggest prop firm in the world. You got a huge lifetime payout. And also the idea that you can't fake that.
You can't fake
Even
that.
if you show like a MyFX book, someone's going to say, oh, but you did this and this. You tricked it like this and this. But when it's an FTMO and you got the QR code, which let's not get into that drama. I don't know if you want to. But
we could. Yeah, we don't get into that.
Yeah, but the point being, like, it's third party verified, let's say, and they know you can't have a hand in manipulating it. So when you were trading the FTMO, and it's been like a year and a half, if I'm correct in saying.
Yeah, August
that year and a half, you were able to rank on the leaderboard 120 times. Huge amounts. So when you were trading that account, were you trading it as you trade your normal, or were you trading it in line with, this is a prop firm and I can be a bit more carefree or a bit more risky, or want to be on the leaderboard, so I trained a bit more aggressively? Or was that just your normal performance?
It was my normal performance.
Oh, wow.
It was like my normal risk profile, taking 1% per trade, or 1.5% max per trade. That my normal risk profile. But back to the MyFX book, I'm not sure if this is correct. So the audience then in the comment section can improve me if I'm wrong. I think if you trade with MT4, because MT4 can be manipulated, but MT5 cannot be manipulated anymore. I'm not 100% sure. Yeah. Maybe the audience knows better.
I think basically it comes down to, people say that you can buy a broker or white label a brokerage, and then you put in whatever in the back end, and MyFX Wick is going to verify that broker statement.
And that apparently works with MT4 only. Apparently, apparently. But maybe the people know better. I'm also not into that, like, because I would, to be honest, like, coming up with that idea, like getting yourself a broker, manipulating the data.
Well, Bernd, you'd be surprised.
Yeah, but how much, like, literally, how much evil is in this world?
Yes.
Like, how much evil to have, like, just this idea to do that. How much evil must be inside?
I think it also speaks to how how few are actually profitable in the industry, because people go to such lengths to do all these tricks and manipulations, as opposed to just spending a couple of years learning the skill set and growing accordingly. But yeah, that also speaks to how hard this journey can be, and the journey of a forex trader or a multi-asset trader.
In general, a trader.
So in your journey, when you were specifically on the prop firms, because I think that's the most relatable angle for the most.
100%.
I saw when you were on the leaderboard, at times you had like 20%, 30% in a month, like huge returns for a month. What would you say for a newcomer or somebody who wants to be consistent over time? What are normal targets to have in terms of what is normal risk management, profit,
perfect
growth,
question,
all of these
perfect
kind of
question.
things?
Because what I teach and what I live by is by looking at not necessarily in percentage growth, but in risk to reward, right? So what when I take a trade, usually I don't go by percentage, I go by the fixed dollar risk.
Okay.
Right. So
monetary
amount. So I define my R. Usually, then in this case, it's like based on my $1 million account, it's $10,000, which is 1%, obviously. So that $10,000 though, that's my 1R, right? And what I'm trying to achieve is my KPIs. So there are only two KPIs basically, but the most important KPI, key performance indicator, is risk to reward, right? It weighs so much more than win-loss ratio. We know that 50-50, we can still be highly profitable. So, but my only KPI basically is risk to reward. So what I would like to achieve per month on average are 2 Rs. That's also my target. The target that I give to every student that I have, because 2 Rs is really a realistic goal and achievable. So if you achieve 2 Rs per month on average, so 24 Rs over a period of 1 year, right? So if I trade that $1 million account, $10,000 risk per trade over a period of years, 24 hours, multiplied by 24 is $240,000, $250,000, $250,000, right? So that's my goal. So, and if I can achieve this goal, I basically have proven to myself I have achieved that target. I'm now allowed to give myself a raise, meaning I can get more.
Risk. Okay.
I can increase not necessarily my risk, but I increase my funds.
Okay.
I increase my funds.
You maintain the 1R.
I maintain the 1R, exactly. But I can increase my funds because with prop firms, this is now pretty, quote unquote, easy to increase the funds. So basically you increase the funds. You still, now having a $2 million account, I'm basically now increasing also, it's that 1% is now basically $20,000. So I take like $20,000, which is basically 24 hours. It's like $500,000 per year on average. If I've achieved that, I'm allow myself basically to, because that number game is really important from a mindset perspective, because we have to all get used to bigger numbers when it comes to trading, right?
So do you think in dollar amount, or do you think in R, and then you don't get influenced
in R,
by $20,000 loss?
Exactly, and this is what I'm trying to do. I'm getting away from the monetary approach to the KPI process approach, because I realized for myself, if I think in dollars all the time, my trading sucks basically. But if I think in process-based trading and in R's, then it's like I'm not so stressed, I'm more like relaxed, and I can really focus on achieving these KPIs versus always running after the money.
So on an annualized basis, I get it. You want to kind of do 2R, let's say 2% per month, and therefore get that kind of gain, which is definitely beating the market, but it's not outlandish. That is like, how is that possible? It's very achievable. Yeah. But how do you modulate that on a month-to-month basis? For example, let's say you have a losing month, or let's say you have reached your 2R for the month. Would you stop? Or
no, I would just continue. Yeah, I don't so I have to consider myself now, since I'm in a social media space, I have to classify myself. Before that, I never classified myself. I was just a trader, multi-asset trader. Yes. Now, once I got into the social media space, everyone asks me, what kind of trader are you?
A strategy,
No, more like, are you a scalper? Are you a day trader? Are you a swing trader? I'm like, okay, then in this case, I consider myself a swing trader, because I'm trading higher time frame. So my execution time frame is daily time frame. So I have now to classify myself. So I'm a swing trader, right? So since I have maybe 1 to 2 trades on average per week, there might be a week where it depends what the market gives me. There might be a week where I don't have any trade, but then on the next week, the market gives me 2 opportunities. So I take these 2 trades. So on average, 1 to 2 trades per week. So I would always, so if all my rules are met, I would always get into a trade, because it's like a very high probability trade. So I would never not take that opportunity, if this makes sense.
When it comes to KPIs, I completely understand it. And I want to ask a question orientated around that, because everyone has to optimize their system for something. It sounds like you're going more for the risk to reward. And it's important for everyone to realize there are certain things in our control and out of our control. And if you try to control the uncontrollable, that's where you're going to lose your psychology and lose your mind and jump from strategy to strategy. So we kind of have to be okay with things out of our control, like the market. The market's going to do whatever.
100%.
But these things in our hands, in our control, we should optimize them and be very intentional.
100%.
So if I'm to list them, and I want to ask you about these controllables, we have our risk to reward, we have our win rates, we have our trade frequency, we have the number of assets we can potentially trade, and then also overall growth potential targets, and maybe cutting off and so forth. And the way I kind of think of it in my perspective is I'm spinning plates. And let's say this risk reward is not doing well. Okay, I need to go back and spin it to make sure it doesn't collapse. So I'm kind of all over the place to recognize where my attention needs to be. But in that sense, I also have my KPIs. So I know I want to keep my win rate within 45 to 55%, because I know that if I go on a higher win rate, which I can, I just pick higher quality setups.
Yes, exactly.
I spin the win rates plate too much, and it's not needed now, because if I have an 80% win rate, it means my trade frequency is falling. And I want to have not 1 trade a month. I want to be trading at a good frequency with an average win rate and maximizing for risk reward also. So when it comes to your distribution of these plates, let's say, which ones are you focusing on? It sounds like risk reward. And where do you maintain all of them? So trade frequency is like 1 or 2 per week, you said?
1 or 2 per week.
Your risk reward, you want to keep it at a 1 to 2?
Yes, like at least 1 to 1, 1 to 2.
Okay.
It depends. It could, but nothing more than 1 to 4.
Okay, and the other one is your asset selection. So for example, I just picked 2, Euro USD and GBUSD, whereas yourself, I like your system, so I want you to talk about it, because it's not something I've seen many people do, which is, in my perspective and also preference, I would say, I don't like to be looking all over the markets on multiple assets, let alone just the majors, because you're also looking at commodities, you're looking at all over.
I look everything, even agricultural markets.
So from my perspective, it's like, because I'm a technical base, I just need to find good opportunities on my currency pairs. Whereas your primary building block is the best fundamental opportunity.
Exactly.
And therefore, based on the week, some asset will have a better opportunity than others.
I like your description a lot, yes.
So can you talk me through your selection process on, because it seems like on a Sunday, let's say, you start your trading week by looking at the best opportunities across multiple asset classes. So let's talk about what those asset classes are and how you are selecting it before you get into the week.
Yeah. I like your description a lot, how you describe the system basically, that my goal as a trader, is to find the best opportunity in this particular week for a particular market, right? And it might be in 1 week, it might be gold, and in another week, it might be euro dollar, in another week, might be the equity indices, but in another week, like now, I'm looking to buy soybeans, right? So we talked about this, right? But you can trade soybeans now in a lot of prop firms as well, like FTMO. But again, that's another topic. But for me, yes, to describe basically my process is on the weekend, this is where I do my analysis. So I have a 2-step mechanical process. Step 1 is looking at the fundamentals. And not only I, this would be a lie, my team and myself, we developed fundamental indicators, right? So these are proprietary tools that we use to basically get a fundamental bias. So this is my step 1 in the 2-step mechanical process. So we're looking at...
Just to clarify, indicator, I know the word means lagging and past, but yours is not an indicator, let's say.
So yes, because indicators, right, when people hear the word indicators, they know the normal indicators, the conventional indicators like RSI, Bollinger Bands, moving averages. So all of them are derived by price. But price is... they're lagging. Why? Because price has to move first for them to move, to follow, right? So metaphorically speaking, you're always late to the party because price has to move first, right? That's why I'm not saying they don't work. They work indicators work sometimes, like any system works sometimes. The question is just, can you achieve consistency, right? That's always the goal. Do you want to make money sometimes, or do you want to achieve consistency, right? So I leave that question.
My comment on
the
indicators is that if my watch is broken at 6:30, and it just doesn't move, well, twice a day it's 6:30. So even a broken clock is correct twice in a day.
I like that analogy. That makes sense. I've never heard that analogy, but I love that. I will take that in the future as well. I'll copy that from you.
But the indicators are lagging, and the way I kind of look at it is there's 2 issues I face with indicators. Number 1, they're lagging, you're late to the party, as you said. So what I read from that is if you can just read price, these are kind of supporting you. It's like when you're learning to ride a bike, you have your training wheels. The indicators are there to guide you, support you. But once you know how to read price, you don't need them. Second of all is that what is causing the market to move? Well, causing the market to move, there's let's say 2 bases. It could be the way I look at it from a technical edge, which is liquidity is the fuel of the market. So when I'm seeing forms of manipulations and all of that, that's how I'll guide my technical entry. From your perspective, it's more like, well, what's driving the asset class is fundamental bias and so forth.
Exactly. Fundamentals drive price on a higher time frame.
Correct. Yes. And if there was no fundamental drivers, price would just be flat.
Exactly.
Like
100%.
Fundamentals is the reason price moves.
Exactly.
And I feel technicals and runs of liquidity are the vehicle to enable that move.
Yes.
But the indicators
100%.
therefore have no purpose. Because this is a causative factor, fundamental causative factor. Runs of liquidity and primary drivers of price action are causative factor. Indicators are correlation. They're just representing these 2 sides of it. So your custom-made tool probably is a more
so I would like
word.
to call it forecasting tools because give you glimpse into the future, literally, right? They give you glimpse into the future.
How does that build, and what does it actually do for you in your 2-step process?
Well, it gives me a fundamental bias, basically, whether I'm going to be bullish, bearish, or neutral in a certain market, right? And then if I'm neutral in a certain market, I completely stay away from that market because it's like, it gives me contradictive information. So I'm not trading it. So if I'm bullish or bearish, then I go to my step 2, where I use technicals to time the market. So fundamentals are lacking in terms of market timing because it just tells you the market's going to move in a certain direction, but not when, and not where, right? Well, it can tell you when, but not necessarily where, and it's difficult with fundamentals, where to place your entry, where to place your stop loss, right, and where to place your target. It's hard to define with fundamentals. So that's why I need to go to my step 2. If I'm bearish fundamentally, then I use technicals as well, and I use supply. I think you use also supply and demand, right? The original supply in demand. There are a lot of
Rip-offs, spin-offs.
Rebranded supply and demand. But I think I've seen your screenshots on Twitter, the trade ideas, the signals that you post, so I can tell that you also use the supply and demand strategy, which is great. So I use also, I would say, the original supply and demand strategy. So, and this is what I use to basically then time the market where can I place my set, basically my entry, my stop loss, and my target. And during the weekend, yes, just to because you asked, so how do I do it? So for me, it's pretty easy and quick. I go through all my markets, maybe it's 30 to 40 markets that I go through, but I just look at my fundamental tools, right? And this goes really quick. It takes me maybe per market 1 or 2 minutes.
This tool is it's not giving you a report of the data. It's taking the data and building a graphic representation.
Exactly.
For you.
So these tools look basically like your conventional RSI. They look like your conventional almost moving average and stuff like this. So we made them in a way because fundamentals in general also are perceived being subjective, but we designed them in a way that we can plot them on the chart and being objective to us at least, right? So we have an objective approach to these fundamental tools. And so I can quickly go to a market, give me a market, we can look at the chart, and I can tell you whether I'm fundamentally bullish, neutral, or bearish within like 1 or 2 minutes. And then I know if I'm interested in that market or not. So that entire weekend process going through these 30, 40 markets, for myself, takes me 30 minutes max. Right. And then I know what I expect for the week ahead. And that's it. So my entire trading week, literally in front of the screen, if I'm not just staring at the screen, because I'm passionate about trading, I love just watching candles. You most probably as well. Like you're addicted to that stuff. You know, during the weekend, I sometimes find myself just opening TradingView and I'm like, why did I just do that? The market is closed. Because you're just so addicted to that stuff. But just the whole trading process is maybe maximum an hour in the entire week. Right.
Okay, so there's so many things that I want to jump into just based on what you said.
We can do 2 episodes.
We probably should, but I think the way I want to take the rest of the episode is these 2 steps that you have, which you've kind of made objective, but not totally, where you have the fundamental portion and the technical. So let's start off with the fundamental portion. Initially, because without your tool, which you developed later on, were you always fundamental base? And if you were you then trying to read reports and all this economic data on every currency pair and asset class and soybeans and commodities and precious metals?
On soybeans, I had like the crop report, for instance.
So you would manually read it back in the day?
Sometimes, very back in the day, I was reading the crop on these agricultural markets. I learned how to read these crop reports and analyze these numbers. So this is how I did it. And then when we slowly incorporated, or I slowly incorporated indicators, it was like 1 by 1. And then we slowly developed our own tools, one by one, basically. So it was like a process as well. But also in the very beginning, I started off just with supply and demand. Okay. And what I realized is, when I was just, sorry, I know go ahead. What I realized is that what I'm now better at is my consistency, and my results are not so random. Yes, you prove it with supply and demand just by itself. You can be consistent, but the results are still somehow random in terms of you can be consistent, yes, but you can still have losing streaks, right? When you have like 20 trades, you can have like 5 consecutive losers, and then it's not like if you have a 50-50 win rate, it's not like winner, loser, winner, loser, winner. The market doesn't work that way, right? So you can have like these losing streaks, and for a beginner or someone who is like not that experienced, it can be really demotivating. And that's why people start strategy hopping. They feel like they don't have that experience, and they have like 5 losers. They're like, it doesn't work for me. They move on, which is like, hey, you need practice. You need like experience. You need like a proper sample size to really evaluate whether it's, but only we can talk about this stuff.
So this point exactly is mentioned in the book, Trading in the Zone by Mark Douglas, where he speaks about that if you have, which is important, if you have a proven edge and you've got the data to support it, when you go into the market, there's a random distribution of your wins and losses.
It's a random distribution.
It's not going to be win-loss, win-loss. Exactly. So if you're going through a losing period and you know you have a 50% win rate, out of 100 trades, you'll lose 50. What if 30 of them are in a row? Exactly. Your strategy didn't fail. Nothing went wrong. It's just your distribution came different and that affected your emotions. But to the point of your fundamentals, you have your leading indicator, which kind of sped up the process of you having to manually read reports. So let's talk about in the context of FX, your leading indicator of the fundamentals, when it's saying, let's say this currency pair is bullish, what data is it taking to then build this report for you? What are key fundamental drivers that you